Hey guys, Josie on Real Estate, day 2, tips for first-time home buyers. A few questions I was asked about yesterday was, shouldn't I get pre-qualified first? Truth is, you need to get pre-qualified before a realtor will even take you out because they don't want to waste your time, waste our time, waste our company's time. But we're going to sit down with you and make sure you're in the right position to buy a house so you're not wasting your own time. And then many of us have people that we work with that we could trust, that we have a reputation with, so we put you in the right hands. If you know somebody, great, but just to go up to a stranger, it's nice to have someone that has a relationship with someone. But let's continue with the tips. This one's pretty easy, but you need to set a home budget. There's a lot to consider besides just a mortgage payment. There are, and I have my list on the screen, property taxes, home insurance, utilities, HOA fees if applicable, maintenance, more. Doctor's bills, groceries. You have to think that not only do I need to buy a house, but I need to survive. So figure out a budget for yourself. Know exactly how much you could spend. You go to get the mortgage, great. You might not qualify for as much as you think because they're going to take a lot of stuff into consideration. Number one, it's not just your 1099. They want to make sure that you're going to be able to make payments consistently for the next 30 years. They're going to ask a lot of questions. They're going to ask about your future plans. They're going to ask how much money you make. Get ready for all of that and get ready to be disappointed with the amount you get, depending on your situation. Well, a lot of people tell me I need 20% down. Okay, you don't. Okay, you put 20% down, you don't have to pay private mortgage insurance. Private mortgage insurance is just for people that paid under 20%. It's for the bank. It has nothing to do with you. It has to do with the mortgage company and the bank. They're guaranteed that money. That's their insurance that you have to pay until you come up with the 20% down. Then you can stop paying the private mortgage insurance. P.S. Private mortgage insurance costs about 0.5% to 1% of your loan amount annually, so it's really just a couple $100s for most people. Once again, as soon as you get to that 20%, you can drop it. There's also quite a few programs out there for down payment assistance. Believe it or not, that is a thing. There's companies out there that will help you get that down payment. Some are secondhand mortgage, low interest, forgivable loans, so you could make a larger down payment. I hope that helps. Let's continue. Depending on your situation, you want to consider closing costs. Doesn't apply to everyone. A lot of buyers can negotiate that the seller pay the closing costs. Closing costs sometimes are 2 to 5% of the loan amount. You just want to make sure, of the sales amount. You just want to make sure that you can cover that, or you have already discussed or you have it in writing that the seller is going to pay for that as you are the buyer. Really important is your credit score, especially with a mortgage. Before you do anything, check your credit score. There's a lot of apps. I use Credit Karma a lot to keep an eye on mine. I use it because I monitor my credit all the time because you never know what's happening. And that's the most important number you're going to have in your life. And when buying a house, it's the first thing they look at. Before you do anything, check your credit. If you have to, build it up. Let's wrap that one up today. Josie on Real Estate. More coming. We're going to do another video. More tips. Please like and subscribe. Thanks, guys.